Up for the live market open for Monday, February 8th. We're still digesting the non-farm payrolls report we had on Friday. So let's start with that. A miss on the headline, 151,000 jobs gained, less than around 190 that it was expected. Initial reaction, the dollar extended its falls. We saw euro dollar rising to new highs. That lasted maybe 1 minute or so, but then we had the other figures coming out, and these were better than expected. Wages, 0.5% month over month, better than 0.3. On a yearly basis, 2.5, also better than expected, also above the previous range. And the unemployment rate falling below the psychological level of 5%, good news for Obama. But regarding not only politics, but also the economy, it fell to 4.9% with a drop in the, unemployment rate falling with a rise in the participation rate. It's good news for the US economy. All these three things together, less jobs gained with the fall in the unemployment rate to very, very low levels and a rise in wages, all these imply the US labor market is getting close to full employment. That's good news for the Fed, contradicting all the bad news that we had last week. Remember, the big picture for last week was, despite this NFP, a sell-off in the US dollar. Okay, worries about the US economy that joined worries about the Chinese economy, of course, and the global economy in general. What else do we have on Friday? Canadian jobs missed expectations. The unemployment rate in Canada rose to 7.2%. It sort of also pushed this together with the better than expected jobs report in the United States, pushed dollar CAD above the lows after it already fell more than 1,000 pips from the highs seen in mid-January. Very exciting pair, in my opinion. Trade balance in both countries came out as expected. Okay, let's look at a few charts. Euro dollar, well, 111.40 is not much of a support level. Anyway, 112.15, I still see it as strong resistance. 110.70 is a strong support. Pair is looking for a new direction. Finally, after a long period of consolidation, made a big leap last week. Pound dollar recovered, but only thanks to last week, only thanks to the weakness of the US dollar. The Bank of England was very dovish. Well, we're off support here at 144.50. Resistance 146.50. We're off support, but I think the pound still has weakness there because of the EU referendum, because of the dovish Bank of England. Okay, dollar yen keeping a safe distance from the 116 level, which the Bank of Japan doesn't like. Currently 117.11. Strong resistance at 118.30 and of course 120. Dollar CAD. Here we are, 138.50, 139.10 is resistance. Low support at 136.20, but before that we have support at 137.20. Aussie dollar enjoys the Chinese vacation, rising 71.25 at the moment, 70.40 to 71.40 is the current range, 72.20 higher resistance, and the round number of 70 also providing nice support last week. Kiwi dollar, 66.50 at the moment. It already traded above 67, didn't go to the next line of 67.90. Currently between 65.80 and 67. Okay, also rising a bit in range. So we are seeing some fresh weakness in the US dollar this morning, even more weakness in the Japanese yen, but moves are relatively weak. China is still on holiday. What else? And we have Janet Yellen's testimony later this week to provide some movement in markets. Okay. Any last questions? Mention today's events. Remember, second or third tier events, 9:30, Centix Investor Conference in the Eurozone. It could fall a bit more because of the uncertainty about the global economy. Canadian building permits and housing starts at 1:30 GMT for those trading the loonie. And at midnight, the business confidence release from Australia. Tomorrow we have Jolts, and then on Wednesday we have Yellen. Okay, so things will surely get more interesting later this week. For now, it's sort of a hangover from the jobs report, Super Bowl, and the Chinese New Year celebrations, the Year of the Monkey. All right. Baltic Dry Index, new historic record lows. Every day it falls to lower ground. Yeah, I'll share your chart here with everybody. Wow. How low can it go? Another 1.65%. It's an indicator of global trade, an indicator of also oversupply in shipping. So too many big ships were built, and the music probably stopped. Is the catastrophe still avoidable? I don't think this is the sort of sole figure to say, okay, the world is doomed because there is less trade or this indicator isn't looking good, okay? Anyway, but we have some kind of slowdown. Anyway, that's it for today. Thank you very much, everybody, for coming. We'll have more action, I believe, tomorrow and, of course, later in the week.